All you got to do is start. Why not? Who gonna stop you? Unless you tell it to the wrong person.
Storm.
So the markets are now open. It's 9:40. We had a little bit of technical difficulties along the way, but we're trading ES this morning,
Storm.
and we're ready to go. It's 9:40, so the market hasn't presented itself anything of significance yet. The only thing that I do know is that we are trading above midnight open. We may be taking a liquidity sweep here. So we're just going to be patient, keep our eyes focused on the task at hand. To see. So this is what I got for you all on today, right? We got the book of the week right here as we're waiting for a trade to present itself, right, for our model. For the book of the week, Storm Shelter, right, by Ryan Blue. We're going to be into that this morning a little bit because I got something in there that I want to talk to you all about. I love how this book just gives a teaching aspect as to how to prepare your finances in economic times, uncertainty during uncertain economic times. And because we're running a little bit late this morning, right? Let's go ahead and get everything going of what we want. Let's get a copy of this here. And y'all know what I'm doing. I'm trying to get this thing shared out, given the fact that we were a little bit late this morning, having some technical difficulties along the way. But we're here now, right? No excuses. We're here to get the job done. All right. So we see a pullback below midnight open on ES. So far this morning. nothing of concern just yet. Just a little bit of patience here. And that's the only thing you can have in these markets, right? So let's see if we could get a little bit of movement. I think we're still waiting on that manipulated move to happen. It has not happened as of yet, in my opinion. Maybe we get a move down, cracking below midnight open, and we could go long as one initial bias, right? See if we could get our nerves calmed down to not catch any FOMO. My thing is, we do have this order block here. That is causing a little bit of concern. So if we can crack above this and be above midnight open, then we can look for longs. But as of right now, we're just consolidating, going sideways. Let's take a look at 4 hours. You can see overall we're stuck into consolidation on the 4-hour chart too as well. So the market right now is trying to find a range, whether it's to the downside or to the upside, right? We do know we have liquidity that lies above us here around previous month highs. We had some buy side liquidity around previous day high. So let's see what happens. See if we can break out of this. Go to the hour chart. You can see the consolidation that is happening right here. So what I'm anticipating is we get the manipulated move. Either that's to the downside on a sweep around previous day low, and we target that to buy side towards previous day highs. But you know, it remains to be seen right now because we are stuck into consolidation. And this is what we don't like. We don't like to trade this. This here, we don't like to trade that. So when we drop down to the 15-minute, you can see that. We're just stuck into consolidation. So it's going to be a pretty tough one today until the market can find a range, right? So the opportunity may present themselves or it may not. We may just end up having to walk away without risking any capital on the day, and I'm okay with that. Yeah. That's how it's feeling this morning, chat. We go and take a look at it on the 1 minute. Look at that. We're just stuck into this consolidation. So while we're sitting here waiting, there's something that I wanted to show you all based upon our strategy, right? And what it is and what we always look for specifically within the market. So I want to show you something. Pull this up for us. One thing that we do always keep our eyes on is news, right? So tomorrow is going to be a day where we're going to get a lot of news come out on tomorrow at 8:30. So we're going to have personal spending. Let me show you this. We're going to have personal spending, core PCE price index, right? Month over month, durable goods orders, GDP growth rate, personal income, and personal spending is all going to be coming out on tomorrow. So it's going to be something that is of significance for us to be able to keep our eyes focused on, right? So you asked the question, Jeremy, is this a part of our strategy? Absolutely. We do want to be aware of any news of what's happening, so we know tomorrow we have news, so maybe the market is preparing itself for that moment, but nothing that is too big, right? Outside of GDP growth rate, and probably durable goods. Durable goods is probably one of those that we may have to keep our eyes and ears on. So we got news. Let's see what else it is that we have.
Websites your competitors don't want you to know.
All right, so let's go back to the charts here. It seems like we're getting that manipulated move higher. We do have the potential to go long here. But to be honest with you, I kind of don't want to engage yet. I still want to be patient to see what unfolds. So, breaking above midnight open, approaching previous week low. I think if anything for us to go long, we got to break out of this range, right? Like, break above previous week low. Maybe we come down even further, right? Let's take a look. think we open high, close low, and we continue down. I can't be so sure about bullishness here. About being as bullish as I would want to be, right? Let's see. This could be that manipulated move, though. So we did have a break in candle closure, but price came right back inside. So we're still stuck into consolidation here. We have yet to find a range. So imagine if we would have taken longs here, right? And we would have jumped in here. Price pulls itself all the way back here. We would have been sitting in some form of drawdown, correct? And you could see the market constantly pulling back. So that would have been a failed entry. So if anything, whatever we break out of, we want to see a lot of momentum, a lot of volume being carried into that space. So if we go to the 3-minute, you can see what we look like on the 3-minute. We still have equal highs here. These relative equal highs. Let's take a look at MNQ while we're sitting here waiting. And you can see the same thing for MNQ, right? Like if we go to the 15-minute, what do we have? Consolidation right here. This is where we stay out of the market, right? Only if you're savvy enough, and I'm not calling anybody who's listening not savvy, but I'm saying like very super advanced to where you can you can scout, obviously with higher leverage, these moves here. So it'll be this move there, this move here, this move here, and possibly this move here. But we may end up drawing lower. So let's see. So us being like this leaves my bias, in a 50-50, whether we're bearish or bullish. I can't really truly decide because we're stuck within consolidation. We have no initial movement happening at all. We're just stagnant. So if you was looking at this and you were to have like indicators like 9 and 21 day moving averages, your moving averages will be looking like this, right? Meaning that we're just consolidating. We have no significant trend. We don't have a trend going up, right? To where you're getting across and on your indicators. You don't have that. You don't have it going down where you have a crossing on your indicators going down. You just have this sideways movement, right? So there's no reason for us to engage. We need We need a manipulated move to happen in order for us to be able to catch an opportunity within the markets. But today, I mean, look at where we are. Look at MNQ, same thing. So what could possibly happen is something that we get something that's like this with MNQ. Maybe we retrace on a manipulated move going up and we target liquidity here. But we need that retracement move to happen. Now, if the market just decides to just dump at that point, then we'll see. But we need that move to happen. So we could go back to ES. Same thing on ES. I want to see retracement back to the upside if I'm short with a pullback. But I'm not so sure if we get that, man. I'm 50-50. What are your bias on today? What's your trading plan for today? Y'all, we're looking at the wrong ES chart. But yeah, what is your bias for today? Interesting how this day is playing itself out. So let's hop into what we were talking about. As we're waiting for that manipulated move. So I was reading something from Ron Blue's book on yesterday. And let's see if I can find it. How many of you feel like you have spending traps? Like, when I say a spending trap, what I mean is you find yourself spending on things that you necessarily don't have to spend on, and it keeps you in this trap, in this loop. So one thing that Ron talks about in his book, and I'm going to read this passage to you. He says, men and women fall into the same spending trap. More often than not, the problem is fueled by unexpected impulse purchases. By taking stock our actual spending patterns, we discover how much of the outflow is going toward regular, predictable expenses such as housing and utilities, and how much is spent on spur of the moment must-have purchases, such as that irresistible new party dress or those nifty space edge stereo speakers. And for me, that's something of real true significance, right? Like for this month, for me, right, unexpectedly, I had a tree fall on my garage, and it was my neighbor's tree. And so my neighbors were not willing to be able to pay to get the tree cut off, and I needed to get the tree removed immediately so I could be able to see what significant damage it had caused, and thank Yah that the damage of what it caused was not as severe. Was not as severe as I thought. One second, chat. So it looked like one of my chargers went out. There we go. But yeah, so like I was saying, I had a tree fall on my garage, and my neighbor wasn't as willing to do anything about it. The tree actually came from his side, right? So that was an expense, unexpected. I had to get prepared to even get the gutter done, right? That's tomorrow. So unexpected expenses are inevitable, to say the least. The other expenses, I'm just not, geared towards being a part of when it comes to eating out or just other things as it pertains to that. So that spending trap, what he talks about, is very real. So the more you continue to read in this book, it says chapter 6 offers a detailed plan for spending smart. For now, though, you can get a big picture perspective on your purchasing habits by saving receipts and credit card statements. Go through your checkbook register. So, which that will be your checking account, because I don't think people do checkbooks anymore. um, to be honest, I personally don't think so. And then they talk about your safety nets. How strong are your safety nets? Your safety nets are things that would enable you to withstand some type of catastrophe, life and disability insurance, healthcare coverage, property and casual policies, and essential parts of your total safety package. The following worksheet is designed to help you prepare or perform a preliminary assessment. This is where we talked about that physical of what you would have to do. So that physical is important. So it says your policy limits may be too high or too low. Provisions must be made for adequate but not excessive coverage. So what it has here is like income goals for the family, living expenses, taxes, giving, total income needed, sources of income, social security, pensions or retirement plans, annuities or trusts, investment income, spouse working, and total income available. Additional income needed, insurance required to provide income, additional funds needed, funeral costs, debt repayment, estate tax and settlement expense, education costs, major purchases. So all these different things here. And so when you have all these different things, you yourself can't just be stuck on just, oh, it's just solely based upon how you move. If that is the case, you're preparing for failure, especially when you have other things that are aligned within that, right? When you have other things that are aligned within that, it makes it difficult. So that's something that you want to take a look at and see. We did post out the send the link out for those who were interested in that. The link is out for you on that. Let's take a look here at crypto while we're waiting. So with crypto, let's check the fear and greed. Close this off here. Okay. This is interesting when you're taking a look at this from Coin Market Cap. And you can see the fear and greed is at a 18. It was at 19 yesterday. So obviously that means the market is moving a little bit lower. So what is it that the market is moving lower on specifically? Oh, and while we're waiting, y'all, we need to log in. Okay. Now that we're logged in, okay, so you see the tight squeeze of what's happening here? So looking at this on the 5-minute, you can see some form of a tight squeeze. Like here. Do the market go and take previous day low and start retracing back up to midnight open? That could be a play if the market decides to go short here. The question is, do we come back within this consolidated state here? This is an interesting day so far. Oh, hold on. Hold on. So the other day, I had pulled something up, right, to where I was showing people this. And for one, let's get it calm in here, right? But I was showing people this. I was saying that when you have this happen in the market, so we can go back, let's go to a higher time frame. Just look at what the market has been doing. And this is what I see, right? And I'm trying to see how many times I could be able to verify that. Okay. Can you find PO3 on higher time frames? And I know it almost seems a little bit difficult, right? But the better you get at identifying it on a higher time frame, the easier it becomes to identify when you see it on lower time frames. Do we return back to the week opening gap where we have buy side liquidity and the market ends up turning up because of the downward pressure it's been in? When I go out on higher time frames to be able to draw a better conclusion as to what it is that I'm seeing, like even if I was to do it on an 8-hour, right? 8-hour chart, same exact thing. And this is why people who do options, right? Like I saw somebody, because the market has been like on a downtrend, I saw somebody who was down like 770 something thousand, and they swing trade options, right? I'm like, are all your plays long? You had nothing that was nothing that was short. Like there's no way with us trading away from all-time highs that you could be long right now on any of your option calls. To be down that much, that lets me know that people are out here gambling. Because when you take a look at it on even when you look at it on higher time frames, like let's go to MNQ. Right? When you go to MNQ, we created a new all-time high. And since then, we have new all-time high here, right? At 30,975. Once we hit new all-time highs, we started pulling all the way back. And people are calling this a dip. Are you serious? When you have no idea or understanding as to what is actually happening, this is how you miss out on opportunities. This is how you miss out on things that are like this. So, what is it that you're talking about? For sure, Jeremy. I'm going to show you all exactly what I'm talking about. I'm going to show you something real quick. So if I could go here. I created something to be able to give you all a better idea as to what is actually happening. So here's something that I want to show you all, right? I created this on last night, and I could zoom in more for you to be able to see it. So I talked about, right, the liquidity vacuum that we're stuck in, deciphering the king dollar regime when cash becomes a black hole for global risk assets. Right now, if you go out and you take a look at what the dollar, when the US dollar index aggressively rallies while equity indices, precious metals, and crude oil slide into unison, like right now, what are they doing? They're sliding into unison. Look, let's start over. Okay. When the liquidity vacuum deciphering the king dollar regime, this is how I said you have a difference between savvy investors versus those who are just out here gambling, especially when it comes to like your option plays and option calls and things of that sort, right? Like, yes, you have an opportunity to make good money on those when the market is trending and moving. Same thing for traders, right? But when we get stuck in a place of not actually understanding what is happening overall, like looking at the bigger picture, this is where you can lose sight. And so you start taking on trades where you thinking that the market is still getting ready to go long, but the market is getting ready to short itself and you're getting caught. So when the US dollar index aggressively rallies while equity indices, precious metals, and crude oil slide in unison, the market is sending an unmistakable signal. This isn't standard, localized sector rotation. It is a textbook risk off liquidity vacuum. This is where you should be risk off on those option plays. The regime, a dominant macroeconomic framework where institutional players treat cash not as a sideline asset, but as the primary destination. So here's the four catalysts, right? Here's the four catalysts. Cash over yieldless assets. A surging dollar often reflects rising real yields as interest rates stay higher for longer and the opportunity cost of holding non-yield assets like gold spikes. Concurrently, higher discount rates weigh heavily on corporate equity valuations, triggering a synchronized exit into yielding dollar instruments. Here's number two, institutional liquidity squeeze. Institutional liquidity squeeze. As the global reserve and financing currency, the dollar faces massive structural demand when volatility jumps. To cover global margin calls, settle denominated liabilities, or clean up risk parameters, institutions are forced to liquidate their most liquid holdings, equities, bullion, and energy contracts. And we're gonna go and look at all of this on the charts. I mean, it presents itself beautifully on the charts. The deflation of risk premiums. Crude oil and gold typically command a premium during times of severe geopolitical anxiety or runaway structure inflation. When both fall alongside rising dollars, it signals demand destruction, fears, or a sharp de-escalation of risk premiums, prompting a swift repricing of global growth expectations. That is why when we take a look at news and we get GDP growth rate that comes out, this ties into what is happening with the market. That's why I say the market is tying itself into news, and it has been doing that over the past week. Most people don't know that. This is where it gets this is how you separate, right? Savviness from those who are just gambling. Here's number four, the denominator effect. Because major global asset classes, commodities, and international indices are structurally priced in US dollars, an inverse correlation is mechanically baked into the system. As the relative purchasing power of the greenback strengths, it inherently requires fewer dollars to acquire the exact same asset base. So, the technical roadmap for the trading desk here at New Level, we're going to track institutional pools, monitor the dollar as it approaches major high time frame liquidity pools, weekly order blocks, or key psychological figures. We're going to identify the turning point, broad equities, risk assets, and precious metals will rarely find a sustainable structural bottom until the dollar prints a clear market structure shift to the downside or completes a definitive sweep of a major high. Risk management until the dollar demonstrates expansionary exhaustion, the path of least resistance across risk assets remain heavily skewed sideways to down. Do not fight the trend when the dollar king rules the board. And that is what's happening right now. That is the difference between a savvy investor, a savvy trader, is knowing what is happening. So let's take a look. What is going on with the dollar? As you can see, we could take a look at it on the daily to be able to give you a better idea. Look, massive liquidity run here. Now, this is where the dollar can start taking some rejections because they're here at equal highs here from the move of what happened on back in May of last year. We're back at those same highs of where we were in May last year. So with the dollar consolidating itself and now trying to create a range, a breakout range, right? We're right here back at the level of what we were in May. And those of you who need to see a clear picture of that, here we'll mark it for you. So here you have that high here and you have this high here. So if you look at the time frame of how long we've been here until this day, that's 413 days. So for 413 days, this is what's been happening with the US dollar. Now the dollar is trying to find a range to break out, and that is why everything is now falling. Crude oil, gold, precious metals, silver, right? Bitcoin. All of them are now pulling back because the dollar is rising. You see, this is us taking a look at gold. You see, the gold done pulled back, right? To a key level of support, where it's breaking that level of support that's there. Silver is at $59. Silver slides again. Look, silver sliding, breaking that key line of support that's there. Bitcoin futures, same thing with Bitcoin. Bitcoin is doing the same exact thing, right? When you look at MES is getting ready to do the same exact thing. Us being up here at all-time highs, now we're getting ready to pull back. MNQ, same exact thing, right? On MNQ, we were up here trading at all-time highs. Now you're getting the pullback. And last but not least, crude oil. And here, let's clear up what I had marked here on crude oil. But you can see the same thing with crude oil, right? So understanding the correlations of of the market, once it starts to decouple itself from things, you have a better idea as to what is happening and taking place. And there is no investor or trader who is going to be able to share that high level of information with you. That was some high level information that I just gave you right there. right? So that's something that I want you to take into consideration. Take that into consideration. Most people are not going to take that into consideration, but you being a new level trader, you being a part of New Level Academy, you will be able to take heed to those things and be able to understand, oh, okay, boom, this is why everything is now pulling back because we're now getting a stronger dollar or a dollar that is trying to be strong to make itself king. So here's another way to be able to see that, right? So even in crypto, you could be able to see it even in crypto, right? So let's go to USDT and we're gonna see USDT dominance. If if USDT dominance is on the rise, then obviously it's in correlation. And look at that. This letting you know that we're risk off. You were risk off here, risk off here, your risk on there, there, your risk off here. And you could go back and when you look at these dates of risk on, risk off with USDT dominance, this is what lets you know that. Look at USDT. So when USDT is down, that means there's money coming out of these cryptos. See that? People are risk off. And they've been risk off for a while. So when you have understanding of this, it makes it a lot more easier for you to be able to know how the market moves. Once you understand this, it makes it easier. Because that's all we're trying to do. We don't want you out here gambling, right? Even if you were a person who wanted to understand Bitcoin dominance, same thing with Bitcoin dominance. You're able to see where everyone is risk off right now in the market. This is risk off opportunity. You should not have any cash or anything held within your stocks or your crypto. After the information that I just gave you, you should be fully risk off. There is no rotation of sectors happening here in the market. There's none. That's why I said the market is pricing itself for GDP growth rate. It's preparing for GDP growth rate, and that's why we're getting nothing but consolidation on today because of that. So if we go back to the newsletter of what I sent out, this is what I sent out and what I told people of what is happening and what is going on. So if you take a look at our roadmap and you track institutional pools, you need to be monitoring the dollar. If you're not monitoring the dollar, how are you going to be able to understand when to be risk on, when to be risk off? And that's why I was saying, like, how is it that a person could be, see, even in crypto, look at the fear and greed. The fear and greed was at a 19 yesterday, it's at an 18 today. It's risk off. You have more outflows going versus inflow in the markets. We're at that time of month where it's very important for you to be able to grasp that understanding. Okay. Broad equities, risk assets, precious metals, they will rarely find a substantial structural bottom until the DXY prints a clear market structure shift. And that's what we need. So we need it to the downside or it completes a definitive sweep of a major high. What is happening? This is why I said at New Level Academy, man, you get nothing but the goods here. You get nothing but the goods. Look, check this out. Let me show you. Let's go back to the dollar. What did we say? We needed a definite sweep of the high, or we need a significant market structure shift of the low, right? We said that. Let's go to a daily. Now, I'm going to zoom all the way back to May. What is happening? What do you see? We're having a sweep of what? The high all the way back in May of 2025. You're having a sweep of the high all the way back in May of 2025. So once we sweep this, then we will have a definitive reason when to hop back into the markets. That's free game. That's next level teaching right there that most people are not going to give you. They're not. They're just not, or they just don't know it themselves. There's no way. I watch a lot of traders, right? And just to be able to see like how they're moving in the markets. And one person in particular who I saw, he was down and he posted this on his Instagram. He was down $770 something thousand on options. And I'm like, are you serious? There's no way I would be taking that significant loss, right? Having those contracts, things that is going to decay. There's no way I will be taking that when I have understanding of what is happening here. The dollar is showing itself strong. And anytime the dollar shows itself strong, you're going to have a slip within what? Gold, silver, your precious metals, crude oil, right? Crude oil, all of them. So when you go and you look at them, what do you see? Oh, okay. Gold down, breaking a key level of support here that has been going all the way back to 2025, all the way back to 2023, back here. It's breaking that now. Silver is at $58. It's down 5% today. Look at silver breaking a key level of support all the way back from 2025. 2025, April of 2025. Key level of support broken, right? MNQ. We hit all-time highs. Now we're pulling back from all-time highs. Same thing with ES. But crude oil was what we were talking about. Look at the slip on crude oil. Crude oil slipping. Why? Because the dollar is showing itself strong. Once you get a sweep of the high on the DXY, and we have a clear market structure shift, that's when things are going to start bottoming out. And so you may get cheaper silver, but right now you just need to be risk off until it bottoms itself out and you get a clear structural shift of what's happening on the DXY prior to you being able to jump into these assets again and you be back risk on. See, with it taking off like this, you can't be, you have to look. From its last low, the dollar is up 4.2%. 4.2%. There's no reason for you to be risk on. You should be risk off. Once it breaks and sweep this high, you want to see what happens after that? If we start consolidating, that means that we're building what? Support. Jeremy, what do you mean if we start consolidating? This is what I mean. If we start doing something that's like this, right? If we start doing this, accumulating right here, then that's when you could say, okay, we're finding support there. It- And once we find support there, we'll know, okay, let's hop back into it. But what sectors will we be hopping back into? And I think that will be determined based upon key news information, like coming out next week, non-farm payroll at the beginning of the month, unemployment rate. These are important dates on the calendar that are trying to price themselves within the market right now. That's why you should not be having I saw somebody was saying they're in Tesla calls, and I'm like, what are you talking about? You're in Tesla calls? How are you in Tesla calls? Look at Tesla. You're in an ascending channel, it breaks, retests, and it's continuing to the downside. Why would you be in calls? So this is one reason as to why I try to tell people, be careful with who you copy trade. Be careful with who you're watching in the markets, because if you have no understanding for yourself and you're being led by those who can't fully educate you on what is happening, like we literally just I gave you, usually this stuff is what I keep behind a paywall. But I said, man, today I'm seeing so many people who are suffering losses and they have no idea as to what is happening within the market. But if they were to just get something simple like my newsletter, they will be able to literally have themselves in a whole different ball game. They will be able to have themselves in a whole different ball game. A whole different ball game. Because you will have clear understanding of what is happening, and you can be able to apply it to your trading and to your investing. Two different things. You day trade to make the capital to invest. You should have been taking profits into a lot of those positions, right? We could just go down the list of the Mag 7 where a lot of profit taking should have been happening. But people fail to take profits. So when you fail to take profits, these are the reasons as to why you're suffering losses. And it's no disrespect to nobody. It's just a matter of you following the right people who are going to help lead and guide you into the best position in order to be successful. See, now we're breaking out of the consolidation, right? Now we're breaking out of that. So is this the manipulated move of what we're seeing here on ES? This could be the manipulated move, and we could be looking for shorts soon. So let's see how this plays itself out. You're saying, well, Jeremy, what makes you think we're going to be going short? Well, first and foremost, we knew we were stuck into what? Consolidation. We've been stuck in it for a while. Even if you go to the 15-minute, you can see we just been stuck into consolidation the entire time. What did we say? We need to break out of this range, right? Break out of this range and for us to continue to go lower. So that's what I have my eyes on. This is the manipulated move here. Price accumulated. Now it's time to manipulate. Once it manipulates, then it should distribute. But if I'm you, I ain't paying attention to who I engage with and who I'm learning from in the markets. So I wouldn't consider that a rant, but now let's get back to some peace and relaxation as we prepare for the markets. But like I was saying, man, I'm all for people taking this machine, because that's what it is, and treating it as such, and not treating it as a slot machine for gambling. You have to understand how these things work. And once you understand how this works, then it makes it easier for you when you trade, because you have an understanding of price. You have an understanding as a reason as to why price moved here. You don't have to worry about every news article that comes out, especially if you're a futures trader. You're not. You're more concerned about the economic news overall and key time frames. So if we're a person who is trading tomorrow in the morning, that most important time frame is going to be around 8:30 in the morning, and that's where you're going to be able to get a lot of volume. But you should be careful. You should be very careful. Like tomorrow, I won't be trading until I probably won't even trade tomorrow, because I'll be going to go get a haircut in the morning around 9, and PM session, I'm not so sure if I'll be able to be back in time for PM session. So we see a beautiful move to the upside, a break above previous week low, and we're approaching that 4-hour fair value gap from yesterday where we shorted. Yeah, I remember the short that we took on yesterday. This short here, what we took on yesterday. You have that happening. We're trading back into this fair value gap here. So it's interesting to see how this plays itself out. We are above midnight open. But we're now in a premium. So those of you who are thinking, oh, we should just full port and go long, I would just be patient and allow the trade to play itself out. This thing may continue to go higher. Who knows? But at least you have a better idea as to what is actually happening. We do have buy side liquidity here, so we may catch continuation to the upside here to be able to fill in these gaps of what we have. So if that is the case, a draw higher, what would I want to see? I want to see a significant pullback on a DXY, because the market has now decoupled itself, right? Things of what we used to follow that kind of gave us an idea as to what is happening, what is going on, we can no longer follow those things, right? Like we used to follow crude oil for M&Q, and we did the complete opposite of what was happening on crude oil, and we took trades on M&Q or ES, right? So when crude oil was dropping lower, we went long on indices. When crude oil was going long, we were shorting on indices, and we traded like that all the way till we created new all-time highs. Now, look at what is happening. Who has now taken over? And that will be the dollar. So we see that the dollar did have a little bit of a pullback, right? So if I could take this off and be able to zoom in a little bit closer. Once it swept that high there, you did see it have a little bit of a pullback. Now it's starting to rally again. So what we want to keep our eye on is this manipulated move of what's happening. So if we can go back to MES, we can somewhat see the same thing happening. So right now, our focus is no longer on precious metals or crude oil. Our focus is on the dollar. So you have to be willing to shift and be ready to shift when things like this happen and occur within the market space. It don't always be like this, but when it is like this, you have to know what is actually happening and what is taking place. So we're 3 minutes from it being 11 o'clock. And as of right now, there's kind of like, after these 3 minutes, I don't think there's a reason for me to engage into the markets today. I mean, with this heavy consolidation that's here still, we need to break above certain levels to be able to get a full range of where we want to go. Right now, we just are undecided because the dollar just swept that high and it hasn't created a full structural shift. It hasn't created a level of support yet. So when those things happen, we have to determine, are we willing to risk capital here, or are we willing to just walk away and come back after the market has restructured itself? And I think that may be the move for us. But you say, well, Jeremy, you could have went long here. And then I would have said, well, what would have been the difference of going long here, right? We catching along and go long here to catch this move. Wouldn't we would have done the same thing to try to catch this move here, but the market pulled itself back? That would have been a losing trade for us. So we would have been gambling had we would have taken this trade here. We didn't take it based off of this move here of what happened previously before that. So we exercised the level of patience that's there and did not risk any capital or put anything at risk at all, period, to be able to lose money. So if this is a day that we just end up tape reading, then it's just a day we end up tape reading. And I'm cool with that. So we're breaking through this 4-hour fair value gap that's here. So that means we're getting a what? Sweep of what? Liquidity that's there from here. Sweep of liquidity from here. So if you drop down to a lower time frame, we want to see if we get a bottom and tail candle, then obviously, you know, that's an entry for us. But if not, you know, we could just decide to walk away. So it's 11 o'clock. So you're seeing some small form of a retrace here. So look for us to come back on PM session now that we're able to break out of this range. By the time we come back for PM session, the market will have broken out of this range, went into a consolidation period. So that would have been our accumulated move, our manipulated move, and then we'll be back for distribution, okay? So I appreciate you all. I hope you have a good rest of your morning, right? A good rest of your morning. And I'll see you all shortly. I'm out.